mandate is very interesting and timely. It is a mandate that will consist of high-yielding fixed income securities and dividend-paying common equities. It's going to be tilted in favor of the U.S. markets and participants, and that is, we think, going to provide a very timely entry point into those markets, as we're quite favorable on both the economy and the equity markets going forward. The ability to balance both equities and fixed income will moderate the volatility of the overall portfolio, yet the underlying growth potential of the dividend-paying equities within the portfolio should provide, we think, some interesting total returns. I've had a long history of experience managing balanced portfolios, 15 years managing a balanced fund for a prior organization. I've also managed dividend growth strategies, which are very pertinent to the balanced fund that we're proposing here. The investment process that we use is really critical to how we propose to generate alpha from this part of the portfolio. We have a very intense 7-step process that we use that takes the analytical team 3 to 4 weeks to complete, where we really look at a company to determine whether it's got competitive advantages, whether those advantages are sustainable, whether the business it operates in is a good business producing high returns and likely to continue to do so. And then we spend an awful lot of time determining what we call a range of values on the companies, where we look at the best case, base case, worst case, and bear case for the individual companies. And that gives us entry and exit points for putting equities into the portfolio.
First and foremost, as we know, Manulife is a global company. We have situations in Canada, U.S., and Asia that we can draw off to get ideas. Specifically for each of the team members, I will be looking at global bonds. Tom and Dennis will be looking at the high-yield markets, high-grade markets, and any of the financials. As we look at those situations, each of us will be responsible for those respective areas and for any idea generation that we put in the portfolio. We could use 2 aspects of the fixed income market, high yield and emerging markets. They both will have an incremental yield that we think is attractive. We monitor the risk there by sizing our positions 1.5% or less, so we do have an inherent risk control there. And by using those type of securities and then recycle them over time, we can, we feel, get a sustainable yield for the portfolio.